Hello, hello, good morning, good afternoon. Let me make sure we are all set. Right.
Good morning, Vivek. It's Ravi. Good to see you
Hey,
again.
Ravi, good to see you back. How are you?
Very good, excellent. Very good. Thanks.
Welcome, welcome.
Yeah, thanks.
How,
I think
how's
last
the
week I did.
family? How's the baby doing?
Yeah, babies are now getting good. Yeah, it's like a first season, so it's a flu.
Oh, yeah, yeah, okay,
Yeah,
okay.
doctor
Uh,
said don't worry about this. It's
uh,
the first year, so you will be okay.
yeah,
Yeah.
they all go through it. And once they started going to school, you'll see a lot more stuff coming in because, they start to interact with other kids and all that stuff.
Ah, yeah. It's our first baby, so no experience, so that's why.
Yeah. So don't worry, don't worry.
Yeah. Okay. Thanks for. How's everything? How's your family? Everything okay?
Good, good, good.
That's good. That's good.
Life
Good to
is good.
see.
Life is good.
That's good.
Yeah.
Where are you, Vivek, in US?
Yeah, I'm in Bay Area.
Ah, Bay Area.
Yeah.
Okay. Might be once in life I'll see you. Once I'll come there.
Yeah. Where are you?
I'm in Vancouver, Canada. Hmm.
Vancouver. Okay.
Yeah. I
Yeah.
heard Bay Area is very good to see. So I'm planning to with my family. Let's see.
Yeah.
I'll catch you up.
All right.
So yeah, one more question. Why like a EMD Intel going very high? It's like
Yeah,
a
we'll talk.
hype or like a
We'll
bubble?
talk about. We'll talk about Intel. Don't jump the gun. Don't jump the gun.
No dump the gun.
Yeah, we will talk about Intel. Yeah, this stock has gone so crazy. I remember we discussed Intel when someone correct me. It was like $17, and then I said it was trading at price to book of 0.7. I'm like, okay, maybe I can initiate some position in it.
Uh,
But 85, oh, come on, too much. But we'll talk about it.
Thanks. Thank you.
Ooh. All right. What else? Good afternoon to you as well, Sunita. Sunita, where are you located? Yeah, if you can just maybe put in a chat in terms of where you guys are joining from, that'll be fun. Oh, VA. Okay.
I'm from Virginia.
Okay.
Thank
Got
you.
it. Got it. Yeah. Thank you. Right. Yeah. Anyone joining here for the first time? Or do we have just the regulars? I'm just wondering any
Me
friends.
for the first time, Vivek. I'm for the first time.
Okay, all right. Welcome. And what brings you here? Just, brief intro of what kind of investor you are and what brings you here. What are you
I
looking to
am
get out of?
I'm a long-term investor, and somebody mentioned me about your site. I went through the basic, and I like it, so I decided I want to join this. Thank you.
baby.
Okay. All right. You went to the website
I
or
did.
okay. Oh gosh, I have to d- do something. The website's like 5 year old. I know some people have told, can you update
I
it?
know.
I just don't have a time, but I'm glad at least someone is looking at it.
There was
Yeah, I'm
no
getting some
phone
background
number.
noise. Ravi, I have to mute you. Sorry, Sunita, go ahead.
All right. I'll block.
Uh, so what happened? Um, okay. So yeah, I mean, I do have plan to update some of the content I think I shared in terms of what additional stuff I'm working on. But yeah, hang on there. I'm gonna add some more content on the website. Right now, it's only thing I do is just update this recording of this meeting. Amanda says Los Angeles. Jim says Portland. Welcome, welcome. I know earlier some folks from Singapore used to join, but those were the days, right? 2021. Everyone wants to be investor. But not a bad day. Even not, this year is also not a bad year. Tom Reno, Sharwin, yeah, Sharwin has a whole gang on the joining from Canada. All right, what kept you busy this week, fellas? Open question. What did you do this week? Either in the market or otherwise, anything new to learn?
Oh, I did some covered calls. This is Serena.
Okay,
Uh,
right.
one of them,
Did
one
you?
got assigned.
Yeah, I was about to ask, did you repent? Because depending on what deltas you did.
Yeah, I did on ISRG. So
Okay, ISRG.
yeah, have too much of that due to being a former employee. So
Okay.
trying to see what else I should do. But it's been a really good stock over the last 15 years. So
Oh yes, ISRG has been one of those winners, right? Along with some of the other very stable companies.
yeah, so I mean they have no debt and over I think 1.5 billion in cash.
Mhm.
So it's just it's hard to give it up because it's been so good. But
Yep, yep.
I don't know how it compares to everybody, all these other winners, but it's been stable. But right now it's off its low highs, so don't know what's going to happen.
Got it. No, I don't own ISRG. I'm just trying to have fewer individual stocks.
Yeah,
So
that
that's why I
makes
don't.
sense. Yeah,
But it's a great company.
yeah. Just kind of accidentally ended up with it, because from
Yeah,
stock
as an employee. Yeah.
options and stuff. Yeah, but
Larry says, John from Fresno, CA, just wanting to learn more about investing, not currently investing other than 401k mid-market fund. All right, I'm a little curious about the mid-market, a little more risky. Depend on you may be looking. I don't know. Are you investing through an ETF or is that a managed fund, actively
It,
managed fund?
I don't 100% know. I know it's through like Empower through
Oh,
my
okay.
employer. So, and there are just some options on there that to kind of invest that money that's being put into the 401k. So I just don't know a whole lot about it. Just wanting to learn more about it.
Okay. Okay.
Yeah.
Yeah. Yeah. For a new ones, I mean, I can only talk about what I did for my own kid. No mid market. I think we have a S&P 500, little bit QQQ, little bit of an emerging market,
Yeah.
and a little bit of a bonds. Mid market generally is more volatile, and number
Okay.
two is if it is a managed one, it's generally more expensive. But if you go with an ETF, all the winners from the mid market segment, they eventually start moving to the higher tiers, right? So if you are a mid market, the moment you become bigger, you will move on to S&P 500s and things like that. So and
Got it.
Tom says pop in marijuana stocks on rescheduling news. Yes, but I think Tom, wasn't there like a pop and then a drop or something like that? These marijuana stocks have been very very volatile over the past few years.
Yes, so Trump finally, or the DEA finally rescheduled marijuana from Schedule 1 to Schedule 3
Hmm.
for medical use. That relieves some of the U.S. operators from some tax consequences in a more favorable way. So fundamentally, it is good for them. Late June, I think it's June 29th. This comes up again for potentially recreational use rescheduling. So we could see another surge. But yeah, you need to trade these things as the news revolves around them. So I got in at fair prices, and then they popped, and then I'm out, and
Yeah,
I'm waiting to kind of scale into them as they settle back down.
yeah, these.
Um,
Mhm. Yeah, these things have been very, very volatile after, and I've watching this since I think 2020. Based on the government or regulations news, this will just jump up, and then unless we see a real change in laws again, that it will give up. So you mentioned Tilray. Tilray used to be the darling, used to trade around $250. I think there were a few more. I think long back, 5 years ago, I did the whole thesis document around, investing thesis on what are the or on the whole marijuana ecosystem. The thesis didn't even play out because the government didn't, it changed the schedule, the designation for these stocks. But yeah,
Right. Just to be clear, Jim mentioned Tilray. I mentioned a couple other ones, which are all
sorry.
U.S. operators.
Yeah.
And so it's important not to stick with Canadian companies like Tilray. I focus my efforts on what are called multi-state operators here in the U.S. Because they're the ones that are going to benefit from state expansion as far as legalization over time, and then any federal benefits.
Right. Yeah, I think there were two ETFs. I remember I was tracking it. One was a US Pacific, and I was more interested on US Pacific because they will get all the benefits of access to the banking system, financial system, and also the treatment of expense and writing of all those expenses in their books, etc. So, but
So I would direct you to MSOS. That's an
Okay.
ETF of the multi-state operators.
Yeah, but I think right now I'm not planning to play in anything. But I did see the news and some of the stocks were like up 20%, and I'm like, wow, these reminded me of the days during 2021. But beyond
Yeah.
that, I didn't look much around this one.
Do appreciate, long term for me is 3 days. So I'm a short-term trader. Okay.
Yeah. Jim says, yeah, sorry, it came from Jim. The Tilray was Jim mentioned. It's a Archer of marijuana stocks, I guess. I also like OGI, which is backed by BAT. I don't think I saw this ticker, OGI, Organigram. No, I've never.
It's a small cap. It's Canadian based,
Yeah,
but
okay.
because it's backed by British American Tobacco, they have access to capital. They're also doing a fair amount of expansion in European markets. Germany approved marijuana about a year ago. And given that British American Tobacco already has relationships and distribution because of its tobacco business throughout the world, OGI benefits from those relationships. So
Yeah.
it's kind of a small cap angle that has a little unique attribute to it for a small cap.
Yeah. And I think all of these the tobacco companies, they are looking for additional source of revenues. Many of them were trying to get into the vaping business, and why not cannabis? Sorry, marijuana. So win-win for both of them. What else? Any other new stuff before we get into our regular discussion? Anyone else did anything?
A-Lab.
Sorry, ALAB.
Yeah. The numbers looks really good. I looked at
What? Okay, there isn't much history. I mean, the revenue growth last year was what? Did they report a result? No. So, what's specific around ALAB? What triggered your interest on ALAB? I thought maybe they reported results. That's not the case.
this is the AI play, and definitely looks to be the revenue is growing good over the time. So I think it could be good multiplier.
So I think right now the financials don't look that bad. Of course, they've been diluting shareholders, but yeah, not much of a history behind it, though. Anyway, what else? Tom says scaling into a natural gas commodity. This is something which I don't understand. New IPO XE Energy IPO backed by Amazon. Yeah. I haven't looked into this XE IPO. I mean, the only IPO that caught my attention over the last few weeks, and I think that's what the market is focused on, is SpaceX. It's gonna suck a lot of liquidity. I think they're planning to raise some $75 billion. I think all attention is over there. So maybe I'll look into this XE. Generally, I don't invest in IPO. As a principle, I think maybe I've done only one. When I say IPO, means right after the company get listed, because we hardly. I mean, there is no history It's you're the management trying to put their best foot forward, clean up everything before they go to IPO. I would want them to, live the normal life, wait for 3, 4, 5, maybe a year or 2 year, and then see how they perform. Ravi says, I'm holding TSM. Is it okay to hold? For me, it is okay to hold because TSM has got, I mean, they basically produce 60% of all the chips that the world needs, maybe 90% of all the advanced chips. So very few players on the fab. Intel is coming up. So they are not the only one. They are getting competition from Intel and Samsung. Tesla has, contracted with both of them, but they're still a big player, right? So TSM, I think they also reported in news like their sales are up like 50% or something. I'm still holding it. I'm still holding it. But all these things are a lot of these things like TSM, semi stocks, energy stocks, a lot of these hyperscalers. They are all tied together in one single theme, which is AI. Right? Let's understand that. And I don't know when that theme, will start to dissipate. So that Serena says, I've been investing auto callables. Are you familiar with them? I did spend some time, but not good at not deep enough on some of these. I think was it S bar or some related product around on some of those auto callables with monthly dividend. Again, at the end of the day, Serena, my request would be to not only look at a monthly like dividend return, look at an overall returns. And I don't know, I've never looked at CAIE, but there was one instrument that I was looking at which had an auto callable feature. Again, look at a total return, which is capital appreciation plus what you get in terms of as a monthly return. Many
Yeah,
of these
there's no
so-called
capital appreciation on these. They just retain the value. They just stay stable. But you get your coupon. It's kind of a coupon, but it's actually an
it's
options
not
premium.
possible for anyone to give you coupon of 14 to
Yeah, it's not a coupon, it's an options premium.
no, I understand that in terms of even on an option premium like CAIE. Let's look at CAIE. I have never looked at that ticker, right? I think this is Calamus is what I was looking at. Okay. 2 or 3 weeks ago, I heard about it. I don't have to go back to that Gemini chat where we're discussing about this. There was something which it mentioned that investors should take note of because I heard about this Calamos. I think one of the podcasts I heard about this Calamos callable income ETF. They do generate income using by basically selling options like many of the other do like YieldMax and there are a few other issues which are very active in this one. But yeah, maybe spend some time on some of these LSMs to try to understand where the risk is. But to me, when I heard about this Calama stuff, I found it too good to be true. So I did want to get into the details of what am I missing. I think it was 3 or 3. It was before I got bitten by the Claude, and after that I haven't been spending much time on it. But since you brought the moment I saw the name Calamos, I realized okay, this was the one that I was trying to get deeper before I bring into this meeting to understand where the risk lies. I heard about it in one of the podcasts.
Yeah, it's actually pretty common in the private investment communities. So it's like the credit risk is between the bank and the actual company. So if you look at something like Granite funds, they're tracking NVIDIA and Tesla. So, and their return is even like 20% that they give you. So it's called
then I think
Granite shares.
Then maybe we are just not understanding where the risk lies.
So they create an options position with, like say a 40%. If the equity falls more than 40%, then you lose. But you don't get the upside if it goes well. You only get the amount that they send out.
Yeah,
So-
yeah. I mean, yeah. So a lot
Yeah.
of them do the collar position. I think in some of the previous meeting we brought up another one, exotic one, which was like, as long as it doesn't go more than 30%, you are safe. But if any of they were tracking 3 separate indexes, any one of those indexes goes 30% lower, then you are suddenly at lose 30%. Again, I've seen many such instruments, and unfortunately, I don't remember. I'll have to go back to the chat where I was trying to understand where the risk is in Calamos. I'm a firm believer that without risk, you cannot get whatever 10 to 35%, and the risk could be as distant as maybe it is a counterparty risk, right? Because
That's it.
these
Yes.
may be just a contract swaps and may not be an actual options, right? If it's just swaps with some Wall Street firm, maybe the risk is on a counterparty. Again, I don't remember what all I had read it like 4 weeks ago. Maybe I need to go back and brush it up.
Yeah, so this one happens to be like a laddered one, which has many of these in it. Whereas like some are just straight notes, like on a particular company.
Yeah. No, I think there are some other stuff from Calamos also, and
Yes.
they basically do. Those were I like some of them,
Mhm.
but again, read through it.
Yeah. I've
40%,
invested about
14% per month return, impossible.
No, it's per year, not per month.
Okay.
So,
All right. Yeah. So 35%. Okay. So because of the 40% monthly return, which are like,
No,
there is no way.
no. But it's been paying out regularly. I invested several months ago. So
I mean, because the vol has been higher, so 15% making on your covered calls at the current vol level where the VIX is 25, 26. Yeah, that's not out of a reach.
yeah.
So that's still okay. Then 14% is fine.
Yeah.
I got concerned when you said that monthly there is no.
No.
Okay.
It pays monthly
It
though.
pays monthly. Okay.
Yeah, but like the Granite shares pays weekly. So
Got it.
yeah.
All right. What other new stuff? Okay, anyone else joining for the first time? Maybe I'll start with our regular session. Nope. I guess we got the regular crowd then. All right. I think I'm still sharing the screen. One sec, too much glare on my face. Let's. Hopefully, this should be better. Okay. All right. Welcome everyone to our discussion number 320 for our weekly investing meeting. So, today what I plan to look at is, we have a earnings season is in, I guess, almost getting in full flow. So we'll look at some of the earnings, especially Intel, because it rocked the market, right? It's back from the dead days, and Tesla also reported it. ServiceNow reported it, and look at some company news that moved the markets. Start with the macro, and that's it. I mean, now next 2-3 weeks is gonna be earnings and earnings, because it is earnings season, right? So, and we all hold some of the individual stocks. So if you're holding any individual stock in your portfolio, make sure you follow their quarterly earnings to see, and go back and recheck your thesis, right? Buy and hold. A lot of people say buy and hold. I am basically focused on buy, check, hedge, and hold, right? So I add 2 more steps into your buy and hold strategy, which is check and then hedge and then hold. It becomes easier to hold. So with that, let's dive into today's session. As always, anything that we discuss here is only for education. So please don't go and trade based on solely what you hear in our meeting, right? Any other questions before I get started? No, looks like we're all set. So first thing, I love to start with something for our soul, for our mind, something new to learn. So this week, I didn't spend too much of our time, but I did come across a series of lecture. I think it's still happening. Is a class at Stanford, which is around economics of AI, right? And this is the beauty of internet, is that you can actually log in and see live classes of live means the recorded classes that are being taught in Stanford. So I was interested in this one, so I can this is so I only had watched one lecture so far, and they're gonna upload it. But if you're interested to see AI and where the AI, where the economic value will be created, what are the different players, and what I like about, I think, this particular class is in the first lecture, the instructor Apurva Agarwal, he's a partner at Altimeter Capital. So it's been really taught by a person who's actually investing in some of these companies. But the best thing is, I think it's got a 9 lectures or maybe 10, 12. Every lecture you'll have someone from industry coming and talking about it, right? Let's say one of the founders of Grok, now it became a part of NVIDIA because NVIDIA bought that company, Sunny Madra, he'll be coming and talking about it. Similarly, someone from some of these LLM model companies will come and talk about it. So yeah, can't go wrong with this. Knowledge is available. I would say the tools and the information is available for free. All you need to do is to go and watch it. Okay. Other thing is, before I forget, there will not be any meeting next week. Is May 2nd, right? Yeah. So no meeting on next week. I will be attending Berkshire Hathaway's annual shareholder conference. So I will be in Omaha. I think the main shareholder meeting or the shareholder annual conference is one part, but there are a lot of other meetings happen on the side, which is what I am more interested in. And so yeah, I'll be there for like 3-4 days, going and attending different investor meetings in Berkshire, in Omaha. So if any one of you planning to be in Omaha during those days, ping me. Maybe we can find some time to get some beers together. Right? How can we go? If you are a Berkshire Hathaway shareholder, you can go there. I mean, I've sent them a request for the entry badges, even if I don't get it in time. I think on Friday, they have a booth set up where you can go and show them a proof that you are a shareholder, and then you can get one. If you're not a shareholder, like Serena mentioned, you're not a shareholder, find a friend who's a shareholder, because they can get 4 passes. So last time I got in 3 passes. I used one, gave one to another person, and then one was still I didn't use it. So if you're not anyone a shareholder is have you any left? Yeah, I have not received. I think this year I ordered for maybe 2 or 3. I haven't received any just yet. So my idea was, even if I don't get it, then on a Friday I'll go there and then ask them for a passes. So they have a booth set up in case you have not received the passes. You can go and get it out there. So yes, if someone of you are not a shareholder but want to attend, yeah, find me over there in person, and then I can get 4 passes. Yeah, Samir said, yeah, if you don't own Berkshire, own just one. One Berkshire Hathaway share we are talking about is a Berkshire Hathaway B class share, right? Currently trading at $470 or something. Right? What do you expect to gain by going there? Institutional investors? No. So the best time which I had last year was to talk to a lot of DIY investors. Of course, there were some analysts as well. There were some hedge fund managers, but I enjoyed the most talking to DIY investors like me, right? So that was outside the Mark Hill's breakfast session, and we started talking at like 10 a.m. and continued till 5:30. And we still had a lot of topics to discuss, but then we were so tired. There are a lot of other investing meetups that happen during the same, these 3-4 days, and it's fun. I mean, if you love talking about investing, it's there's a reason why it's called Woodstock of capitalists, right? So I will be there. All right. Another thing is those who love to, invest, or I would say speculate or bet in Polymarket, please understand who are you betting against, right? So we all know what is insider trading. So there was an interesting tweet I saw, a post, I guess nowadays it's called post, I saw on X, in terms of how someone had a completely different thought of, betting against or betting on Polymarket, and how they twisted the odds in their favor. So for whatever reason, there's a bet on Polymarket on with the highest temperature in Paris on April 15th. Right? And I think there were whatever 400K, 500K dollars or euro, whatever, being bet against this. I don't know, people have a lot of free time or maybe free money to bet against on these things. So while, some of the serious bettors are pouring through the reams of data on the daily charts and monthly charts, the historical data, and trying to figure out what the general temperature is. And then they realize that, generally stays around 18 degrees at this point of a time, like 18 degrees centigrade. Someone had bet that it will hit 22 degrees centigrade. And of course, it was talking in options terms. It was like far out of money, very low probability. So the payout will be much higher if you actually hit that. So, the Polymarket was using a sensor. There's a single sensor which was sitting near the airport runway perimeter, right? So the guy who took a very low probability bet. So he bought a long shot outcome like 22 degrees centigrade, where everyone was settling at around 18 degrees centigrade. But what he did, walked up to the probe and basically used whatever hair dryer or something and just heat up the individual sensor. So the whole Polymarket bet was based on the outcome or the reading from that individual sensor. And basically he rigged it in the person rigged it, in their favor. And not only once, I think they did it twice, April 6th, April 15th, before he got caught in terms of, but he walked away with like $34,000 richer before he got caught, right? So if you're betting on any of these prediction market and, these Polymarket, call sheep, Polymarkets, etc., be aware who are you playing against. We have in the normal capital markets, we have a lot of cases of insider trading. This was like maybe an outsider trading. People are going out and figuring out how to rig the markets or rig the sensors in their favor. Right? But it does make me a little more bullish around some of the use of decentralized oracles to get the data. Right? Maybe in future these companies will start to use it, but for now, depending on one individual sensor which is lying unguarded in somewhere in Paris airport, and there is like a 400K of bets going around on that. Come on, a person with a hair dryer was able to basically swing the result in their favor. Right? So don't do it unless you know what you're betting against. Right? These markets are not regulated. You never know what's been happening there. Right? P. Shank says insider trading with each Trump announcement. I mean, that's what we've been saying. Prior to this announcement, you see some contracts on future contracts being bought or sold. Right? Samir, what if sensors were being maintained that they end a bit broken? I don't know. Maybe Polymarket has some regulations or TNCs on how they will settle the contracts, right? And I do know, was it Kalshi or somewhere? Someone, I mean, they basically revoked some of the contracts, saying, "Oh no, there was some fraud or whatever." So I don't get involved in these things, but sometimes these are the fun stories to read. But be careful, right? That's all I want to say. Even on the regulated capital market, we are seeing a lot of insider trading, right? Pishak has mentioned a few, and so you can only imagine what goes around on the other markets. All right, coming to overall market overview, nothing much happening on Middle East. We thought we got a peace deal signed, will get signed, nothing happened. Ceasefire, we're not going to extend the ceasefire. Then, oh yeah, now it is extended indefinitely. Um, I'll only believe that we are close to peace deal when we start seeing some more ships moving through the Strait of Hormuz. Right? Otherwise, right now it's just thoughts. All are these just hopes. Market is forward looking. We have already priced in that sooner or later, this issue will get resolved. Vice President and I think Jared Kushner were supposed to be in Pakistan. They canceled their trip. There is no one coming from Iran to negotiate. Who are you going to negotiate with, right? So, well, we'll see. We'll see. Right now, I'm not assuming anything that we're gonna get. I think, or at a higher level, we'll not get into Third World War. I think that probably picture is becoming clearer, and we will come to some sense of a resolution. It may not be as soon as what we may be expecting, but we'll get there. So, again, we might have priced in some of those peace talks. Only time will tell. So I want to focus on what actually matters in the long term, because we have seen these macro shocks time and time again. Go back and look at like a 100-year chart. You'll see, all the conflicts, etc. But at the end of the day, what matter to the markets is how the companies are performing and what the results are, right? What the earnings power are. So get back, focus onto the earnings. We got our earnings going on, and if we really look at, we're still looking at a good growth, earnings growth. These are the market projections around, latest 2026 EPS growth is IT. We are looking at maybe around 40% growth, 45% growth. Real estate is the least one, but overall, I think all 11 sectors of S&P analysts are still projecting some decent growth. If you average this out, we are looking at close to 14 to 15% growth over in S&P 500, right? So that's what I want to focus on, is growth in earnings. Yeah, Sam.
Question. You look at GE Verona, how come they couldn't deliver or was GE Verona just stuck there when it was part of GE? I mean, did they need to split GE up to realize all these gains, like in healthcare?
No, so GE Vernova, that's on the power side, right? It's not on.
Yeah, but you remember there was a split up of GE like 5 years ago.
Yeah, so GE split into 3 separate divisions, right? The aerospace, healthcare, and then energy. But again, the things that ailed GE was the whole conglomerate that Jack Welch had created. And then it became much more of a financial behemoth than the industrial company. The focus was all on like meeting the numbers. GE Capital was a big drag on GE during 2008, 2009. New CEO came in and said, not having it. Larry Culp did a great job. I should have bought GE shares. I remember I bought GE shares, like when I was just starting investing in US, I mean, when I was outside US, I couldn't invest in it. But then, because hey, that's a big company that I've heard about while growing, and one of the most respected companies in corporate America. I remember reading books. There were two books that Jack Welch had written, right? During my college, I read both of them. I used to wonder about GE. But anyway, should have kept those shares, man. So, but yeah, now they are unlocking the values, right? So aerospace is separate, healthcare is separate, and right now I think that the darling of the markets is GE Vernova, energy company. So sometimes you gotta, and that is why sometimes market reward those companies who can separate out, and don't have the overhang of a lot of unprofitable businesses. If you can separate out um, some of the portions of businesses into separate companies, right? So over decades we have seen markets moving from core competency to conglomerate, and now we're back to core competency and focus on what you do best, and not getting back into the 1980s of a conglomerate, building a big conglomerates and doing whole integrations, vertical integrations. Yeah, things keep changing. So, but this is what we also need to focus on. Since February 27th, there's been a revision in the EPS by the markets. So right now, market is expecting EPS growth of 605% in Micron. Can you even imagine? Every analyst analyst as a community, as a consensus, was so wrong in terms of when it comes to looking at future, despite all the access to information and all the latest tools and the millions and millions of dollars that these companies spend on the whole process of getting into the details to come up with an estimate. And they were so wrong when it comes to Micron. Right? Since February 27, which is like 2 months, they've raised their EPS growth estimates on Micron by 93%. So 2026 just started, and they raised their estimates by 93%. Because they're like, oh, we were so wrong. But now what concerns me is overall, we're looking the EPS growth right now of 18%. I think at the start of a year, it was around 14 to 15%. That's the number I said, but I forgot that was at the start of a year, we were projecting 14 to 15%, right? Now, since February 27th, we added another 3%. So now we're looking at 18% growth in earnings overall as an S&P 500. But S&P 500 is not as diversified as one we may think, right? Out of this growth overall happening in S&P 500, 51% of the increase in the estimate has come from just one company, which is Micron. Just one company is responsible for it. Right? And then, of course, there are, if you look at the next ones, which are ExxonMobil, Chevron, ConocoPhillips. So these are all energy companies. If you look at all of them, the two themes is clear. It's AI, chips. So starting with a high bandwidth memory, then you come to Broadcom, which is your ASICs, and then you're looking at a SanDisk, which is a storage. These three are the chip company. These three are the companies in AI ecosystem. All others are oil companies, and because of increase in crude oil prices and whatnot, all the conflict, analysts are upping their revision, basically their growth or EPS growth. And but we also have to think about is what if the demand of AI doesn't pan out to be? Right now, these are all the estimates. Right? Now, the question that you need to ask yourself is, are the analysts swinging too hard on the other side now? What if this AI growth doesn't pan out to be as what analysts are expecting it to be? And what if we get the oil moves down from wherever it is, 96, 97, maybe 100, back to 70s? What happens to these EPS revisions that have been, across S&P 500? If these two sectors cool down, we should see the overall S&P 500 EPS growth coming down much faster. Right? It's not, when I say 18% growth in EPS, right, largely driven by these two sectors. So that's something which we have to be aware of when you're investing in the market. Looks to be great. 18% growth. This is probably the sixth quarter we are talking about double-digit growth. I'm probably looking at from a year perspective, one of our strongest year for 18%, but it's highly dependent on these two legs, AI and energy. And if you watch at a macro level, keep an eye on what's happening in these two sectors, because the way in last 2 months they have done an upward revision, you could very well, I won't be surprised to see a downward revision to EPS and then the market will react opposite, in a different way when analysts will bring down their estimates. That was an interesting one. What else caught my eye? Jensen layers cake. Jensen is bringing a cake that he can eat. He can have a cake and eat it too. Who else heard about the Jensen's 5-layer cake? It's an interesting way to look at this overall AI ecosystem. Not that we have not talked about it, but putting it in a picture, putting it in a framework, and that's why it's Jensen Huang, right? In a framework makes it much easier for us to understand. And this is what he talked about, right? I think he was in some meeting with World Economic Forum, or there was some conference where he talked about that it's the overall AI is a 5-layer cake. Right now, each one, billions and billions of dollars are going towards one layer, which is your models, right? Everyone is crowded here on the models. Who's got the best models? Who is bringing, whether it's going to be Chat GPT or whether it's going to be Anthropic, Claude, who's going to win that race? Billions and billions of dollars are being spent here, right? But this is just one layer of multiple layers in the whole AI story. That's what basically Jensen's message was, right? That a very base layer, it's the energy, right? You can't vibe code energy. You can't vibe code electrons, right? So, but if you don't have energy, nothing else will work out. Then you got a chips, which is the compute. Then how do you even access that compute is through the infrastructure, which is the hyperscalers. Then the models come in, right? So models can't work unless you have these three things in place. Right? And then on top of it, where the application will come in. And as always happen in any technology revolution, talk about internet, talk about mobile, and now we are looking at in AI is during the initial phase of the new tech revolution, all the stocks or the companies which are at an infra layer gets all the valuation. Right? Once that is being built out, you will see the companies at an application layer is where the lot of value will accrue in the long term. In the internet, what we are now 25 years of internet, a little more than that, but ever since it became a part of every household, let's say 20-25 years is where people started to use the internet more regularly. We don't talk about the value of internet accruing to the broadband companies. Those were the days. 1995 to 1999 or till 2000, a lot of value accrued to the infrastructure companies. Exodus Communication, ring a bell. There were data centers, Lucent, Nortel, like the companies that provided the infrastructure for packets to move, right? Cisco, right? They commanded most of the valuations. Over the years, valuation started to shift towards more application. Companies like Amazon, Netflix, right? All those are building the applications or those who are creating the ways for end consumers to make use of the internet. That's where the value will accrue. Same thing will happen in the AI revolution also. It's only time will figure out how long will it take. Right now, a lot of money going in these applications we haven't yet seen, right? But this is where the economic benefit this is where the real value will come in, right? The money will come from the top, right? And whether you can do this or not, the ability will come from bottom. Models is just dependent on both of these things. So eventually, and we've been talking about it, that these models will become commodity, right? No, commodity, let me say not exactly commodity, but there will be hardly much of differentiation. Maybe you'll have a fewer, rather than having 10, 15 models, will settle down on a very few number of models. It'll become undifferentiated from one another. Right? 2 or 3 players would remain, and all others will be consumed by bigger ones. I don't care as long as every model does a reasonable job. I don't care, what LLM is the application using behind the scene to give me an answer. Right now, I think all of them are trying to become better in terms of not to hallucinate, give better responses. But it's a matter of time. They will become undifferentiated with one another. And that time it will be. You don't care which power plant is generating electricity or sending it, electricity through the wires to your home. All you need is you press a switch, you want the light to be turned on. You care more about what kind of a chandelier you have. You don't care about electricity at all. But go back 70, 80, 100 years, all the value accrued was in utilities, right? Now there is a reason why it's called utilities, right? Not sexy anymore. Similarly, some of these things will become utility. So let's go through what Jensen Huang had to say, right? Energy at the bottom, chips above it, cloud, then the models, and then the applications. 5 layers currently is the one war. Everyone is crowded on a 4th floor. That's where people think the AI is. 1 floor below the finish line, because that's where the application, then you've got these LLM models, but it's 3 layers above the foundation. It's in the middle of a building. At the bottom is energy. You can't outcode the grid. You cannot train a frontier model with a press release. The smartest model on earth still need a dumb turbine spinning somewhere. Surprised at what some of the energy stocks, where they are? Not anymore. Right? The smartest engineers alive are building on top of someone else's silicon. Right? Inside someone else's cloud, provided by someone else's electricity. So all the top AI engineers in OpenAI or Meta Superintelligence Labs, they are building on top of other people's work. They own nothing beneath them, right? The layer on top is ultimately where the economic benefit will happen. That's where the money will start to flow in. Healthcare, finance, manufacturing. That's where AI will actually meet money. And I thought maybe 2026 will be the year in which Street will ask to start question, show me the money. I think I'm wrong. Maybe Street has got a lot more patience. Maybe 2027 or 2028, Street will start asking, show me the money. You've done so much investments. Where is the value, right? Are the companies like regular, the physical layer of the companies, are Home Depots or the healthcare, manufacturing, have they been able to reduce their costs? Have they been able to increase their margins, right, by using AI? Otherwise, AI is just a tech. If it is not benefiting the businesses, the real businesses, then all the valuation will collapse on tech, right? So that every dollar of real value will live at the top, every physical constraint that decide who get to play lives at the bottom. Model is just sitting in between. Right now, everyone is focused on model. Silicon Valley is burning hundreds of billions of dollars to build plumbing for someone else's economy. It has always happened. No, it's not the first time. It has always happened, right? The basement decide if it runs, penthouse decide if it pays. I really like this one. Maybe I should borrow this code. The basement decide if it runs because that's where you have energy chips, the silicon and the hyperscalers, and the penthouse decide if it wants to pay for it, which is where the end consumers will live, right? Who are using these models and who will be willing to pay for this. The companies building models think that they are building a future, but they are not. Interesting, or different way of thinking. Right? Now, shouldn't be surprised that the semiconductor ETF, I'm not even talking about individual companies. I'm just talking about semiconductor ETF, but SMH is what I have. No wonder that it's up like gazillion %. To me now this seems to be too much, but look at this. It's from end of March. It was like $360. It's already crossed. It's like up more than 50%. What we are 3 weeks into April, and all these companies underneath this. I think the another one is SOXX. These are the 2 ETFs, same trajectory. But what else do you see here? This has been the longest streak of higher highs, green candles on semiconductor ETF. Ever in the history. I think it is 18 days of continuous gains, no rest. Now let me go back and look at, has never happened. I'm just trying to see whether the news is wrong or not. Just trying to quick validate. We see a lot of green candles here, but nowhere near these 18. Some more green candles here. This is close to 2000. Oh, no, this is 2020. Oh God, this moved into 2018. Doesn't seem to be right. One day. Anyway. So I personally feel, come on. How much of a future growth are we already pricing in any of these companies? Right? But this is where lot of what we are talking about in this one was this chips layer. Right. All right, that brings us to our earnings coming up next week. And like I mentioned in last Saturday, April 29th. Damn, I'll be flying on this day. But block your calendar. Your portfolio could have a huge swings on that particular day because we have trillions of dollars of companies who will be reporting results on April 29th, right? Microsoft, Amazon, Meta, Alphabet. Who cares about that? There is Ford. Nobody talks about Ford anymore. That doesn't move the market, right? So these 4 big companies are reporting results on the same day. And then on Thursday, you have the another big company, which is Apple, right? And I guess the only thing that we will be missing will be NVIDIA. NVIDIA generally reports very late in the cycle, so we'll have to wait for NVIDIA. But I guess next week is the I would say if not the most important, a very important week for overall markets. Depends on how some of these companies, what their future guidance will be. So I think probably it's more based on how the future guidance will be. And will be interesting to see. So mark your calendars. And Yeah, if you can't handle the volatility, maybe don't don't log into your brokerage platform on 20, or I would say on 30th. Like these are all most of them are reporting post market close. What else you guys are watching? I mean, there are a lot of other interesting companies as well, but I guess these big tech will steal the limelight. We got Robinhood, I mean, it's again retail favorite stocks. Um, now who cares about Cadence? Sure, they got beaten up by because you think Claude can wipe code an EDA company. We got a Coca-Cola, pretty stable. GM, another one. What else are you guys watching? I know SoFi is retail favorite. A lot of retail investors are interested in SoFi. Ginkgo Bioworks. Then we got a bunch of ConocoPhillips Oil, Eli Lilly, MasterCard, Altria. Then the Apple and a lot of oil companies on Friday before market. Gonna be an interesting earnings week. Any other company on your list? What you guys are watching? Bloom Energy. Wasn't Bloom Energy had some upswing because of some deal they signed up recently?
Yeah, they had a deal with Oracle.
With Oracle. Wow. So that makes me wonder sometimes, like Oracle doesn't have money. And now Bloom Energy is going up because they have a deal with Oracle. So I mean, Oracle itself has been up more than 30% in last 2 weeks or something. 130 to all the way to, so it was almost $200. Look at an Oracle. Man, it's all AI theme is what is driving basically. AMD, Tesla already announced. Tesla announced this week. So Tesla is already done. Is AMD next week? No, AMD is generally this chart will have AMD. I don't know, maybe we'll find out. Nebius. Nebius is a competitor or same business as CoreWeave. Yeah, some of these neoscaler companies, I mean, they all have done great because of the demand from these hyperscalers, because they can't build fast enough. So they're reaching out to these Nebiuses and the CoreWeaves of the world. Elena says, want Tesla stock to split. How does it even make a difference, Elena? Stock split, how does it even make a difference? It's the same, unless you're doing an option trade and then per contract. Yeah, but what? 45 cents P doesn't make a difference. I mean, Tesla stock is already so heavy. It's so highly liquid. The bid-ask spread is already tight that, I don't know that I'm waiting or praying for it to split. I might, wish for some of the other stocks where the bid-ask spread is so wide because the liquidity is not there in the options market. Companies like Mercado Libre, like ASML, maybe I wonder, maybe they should split, get so that we can get more liquidity and better pricing on options. But other than that, I don't think there is any reason for companies to split their stock. If you can't spend $1,500 to buy ASML, buy a fraction of it, right? Where it is $14.58. Buy a fractional shares. You don't have to buy one share. Buy just half of it. Buy 1/10 of it. So, but market still reacts positively to any share split announcement as if something has fundamentally changed. Come on, it's the same pizza. I just cut it into halves, right? Anyway, looking at the the fear and greed index, we are still in greed phase. Again, we don't know what's going to happen in future, but having watched the market and this index for many years, it's just a little indication of, hey, how the other participants are behaving, and you can determine how you want to position yourself, right? There is no, I'm not telling you in either side buy or sell, but just that, hey, this is what's happening in the market. Just tell you where the market is. Then you can decide how you want to play in the market. I find this more of a, I use this personally more of a contrarian indicator. Market goes to greed and extreme greed, I'll start pulling back, maybe start selling some of the stuff, or become more aggressive in selling calls against my positions. If it moves to fear and extreme fear, that's where I would want to start adding stuff in my portfolio. Provided it's the same business, just watch the business, wait for the right time to add it. You will get the time. Alfred said June 4th we will see more liquidity. PDT is going out. I got an email from Tastyworks around the Tasty Trade folks saying PDT, they'll be down with this whole PDT stuff will go out. Not that it matters to me, but I guess there are a lot of people who want to trade with a smaller account size and then don't want to hit that PDT flag. Will be good for them. At a sector specific year to date, we are green in S&P 500, close to 4.5%. It depends on including dividend, not including, but 4% in 4 months after having close to 20% plus gains in last 3 years. Feels pretty good. Not that this journey was smooth. We have gone through lots and ups and downs. We've gone through a lot of volatility. Volatility is still there in the market, but that's what we get paid for, right? To go through that volatility, to get higher returns. No volatility, no returns. And this is the ticket. Volatility is the ticket price that you have to pay to enter into the club where you have a chance to make money, right? More than what the T-bills will provide. Now, then it depends on you how you play in that arena, whether you make money or you lose money, but at least you have a chance. What else? Anything else on your mind? I have some company news. Then we got earnings to go through. Anyone here interested on what happened in the crypto side? I read about the exploit on Kelp DAO. Did anyone spend any time in trying to figure out what the heck was that? I know there are some folks. Where is my friend Jose? He's active on crypto. Who else is active on crypto? Active means at least familiar with the ecosystem. Localized problem, no contagion risk. Yeah, I mean it depends how you classify it as localized, but I do want to talk through it. It's an interesting read just from a curiosity perspective itself, right? Not that I've been impacted by it, that I had any funds on Aave, etc. But it's an interesting stuff to read. Anyone else on crypto? We generally haven't had much discussion on crypto. I think maybe once in a couple of weeks or a few weeks. I mean, Robinhood just follows Bitcoin. Yeah, I mean that's fine too. Bitcoin will be the new, at least as from the proponents of crypto, Bitcoin is going to be the new underpinning of financial ecosystem in future. All right, if ever time, we'll get into the Kelp DAO. I'm still trying to understand how the exploit happened, so I did put together some notes. Jose saying, I'm not going to flip bullish unless I see bigger move up or until AI narrative takes a back seat. I mean, I don't change my view on crypto on week-to-week basis. It 10-year, 15-year long play. Works out great, doesn't work out, that's fine too. All right, looking at some of the market news, I just want to say it, if you're in a corporate, choose wisely, right? This is not a great news, right? So Meta planning staff cuts, Disney staff cuts, UPS. There's a list of the companies that have been planning all this, workforce cuts. So whenever they plan or announce these, what happened to the stock? Goes up. Right? So you choose. You want to be the stock owner, you want to be the employee. Not saying that don't be employed, right? But you got to figure out what's some of the moves that are bad for employees are good for stock owners. So choose where you want to be. Own businesses. Not everyone can start a business from scratch, right? Not everyone may want to start business from scratch. It's not easy to run a business, but all of us have an opportunity because we are in the best capital market in the world to own businesses. You can still own the greatest businesses on earth by being in capital markets. So get going. If you've been sitting on the sideline, get going and own great businesses. Salary can only take you up to a certain point of time, right? Unless you're working for, let's say, OpenAI or some of these, which is like a minuscule percent of the folks who work for these big ones. Most of us barely get to make both and meet on your salary income. So do what the company's owners do, right? Own their companies. And that's what we focused on, buying great businesses and becoming a business owner, then only, rather than just being dependent on some other business for your financial future. At the end of the day, it's us to be blamed. No, we can't blame anyone else. We can't blame Zuckerberg saying, oh, he cut down, 10,000 people? Zuckerberg has to look for himself. Every one of us have to look for ourselves, right? So I see a lot of narrative in the market that this is not good. Why are they doing this? Companies are making billions of dollars. Why are they cutting people? This is capitalist society. And companies' loyalty lies to shareholders, not to the employees.
Vivek.
So they are doing what they are supposed to do. Yeah.
The year that Microsoft was going public, I have a friend. He was going to City College of San Francisco, and he said like the IT director was saving up, trying to accumulate as much funds as possible to buy Microsoft. I believe they went public in 1989, right?
Yeah, it's what they had. What did they? No, Apple had some 50th year celebration, something like that. Yeah, Microsoft has been public for a gazillion years by now.
So yeah, exactly. 9-to-5 job isn't going to sustain you.
Oh yeah, it's.
Thank you.
It's sooner we realize, better it is for us, right? And especially when you have a chance to own best businesses, why not? Everyone wants to work for Google, but they don't want to own Google. This is what I can't wrap my head around it. Apart from the fact that you want to diversify, right? That's why you don't want to own Google. I understand it. An employee of Google says, I don't want to own Google share. I get it, because you don't want to put all eggs in one basket. You lose the company goes in, through a bad phase. So your shares go down as well as you lose your job. Bad stuff. People outside, they want to work for Google, they want to work for Meta, but they don't want to own shares of Google and Meta, which is what I can't wrap my head around it. Come on, if you love the company, you love the business, you want to work for the company because you know it's going to pay you, better and better, it means the business will become better and better. Underlying assumption is, so why not own that big piece of business? That's exactly what owning a share allows us to do, right? Shares, despite a lot of people want to just trade the numbers on the chart. At the end of the day, share is your stake in the business. It could be 0.00001% stake, but it is a stake in the underlying business. Own businesses.
Vivek, my dad worked for Xerox PARC in the late 70s and 80s. So Xerox didn't go positively.
I'm telling you, so individual, that's why we come and talk about it. If you want to own individual businesses, you need to understand the business. Otherwise, don't own individual companies. You own an S&P ETF, right? Don't put your all eggs in one basket if you cannot really watch that basket. Put all eggs in Xerox PARC and then guard it, right? Only Warren Buffett can do it. Charlie Munger can do it because they can affect a change in the company. You cannot. I know Charlie's or Warren said, right? So diversification is basically you're trying to hide your incompetence of analyzing a companies. Sure, at his level, yeah, because he put all the eggs in 10 baskets, they can go and change the management in the 10 basket. You cannot. If you put all eggs in Coca-Cola, right? Coca-Cola goes down, there's nothing much you can do about it, or any other company, right? So you gotta look at from a diversification perspective, right? At the end of the day, still, if you bought with S&P 500, you're still owning 500 businesses. Right? So unless you have a time, capability, and interest in following individual companies, reading about them, don't own individual companies as an investor. Now, if you're a trader, there are a lot of traders in our meeting. It's a different matter. Then you are playing a different game. Right? Understand who you are and then play accordingly. Don't. I think my biggest learning over the years has been trying to understand who am I. Rather than trying to find the best stocks, try to understand who am I and what works for me. Right? And then I've decided, okay, I want to play X game or not. Do I want to play this one or not? And people make money. It's okay, good for them. I'm just not suited for that kind of a game. If I'm a marathon runner, I have a note that I don't want to jump in a swimming pool because that's not my game. Right? I'm not a swimmer. I'm a marathon runner. Identify what you are good at and stick to it. US capital market has got everything. You can do anything that you want to. Just need to figure out what is that you are best at. Tom, it's saying, I find it interesting how many crypto minings have changed the data center model. Yeah, I mean, that's where the most money is. So even prior to that, right? So there are a lot of companies around that whole data analytics and all that became crypto miners. And now the crypto miners became data center providers. Basically use the same GPUs. And now you can use the same CPUs to run AI workload, inference workloads. So, and I like that companies will pivot where the puck is moving. And the shoe company, that is little far off, Jim. Yeah, Allbirds. I mean, this reminds me that Long Island blockchain company, right? 2017, where the blockchain became the like AI stuff, and companies were just changing their name, including blockchain in their name, and the stock will go up like 200%. Right? Just like companies used to put .com behind their name in 1999, right? It's the same shit we are seeing here. Company announced that they're gonna raise $50 million of debt, convertible debt, and buy GPUs to provide compute capacity, to rent out compute capacity. The stock went about whatever 600. I don't recall how much was Allbirds up, like 600% or something like that. So crazy. That's where you need to really figure, hey, there'll be a lot of risk in also investing in these individual companies. We never know which one will will be winner. I don't know which one will be winner. OpenAI, Claude, Anthropic, Google. We have no idea. It's too early in the game. So maybe own all of them. And that's why I love focusing more and trying to reduce individual stock positions. It's fun. It looks great. If the stock that you own has gone up like 4x in a year, but you never know when the boat will turn around.
Vivek, how do you own Claude? I can't even test Claude.
Let's park that for separate discussion. In a breakout room, we can discuss. But I'm amazed by Claude. All right, what else is happening on the market or the economy? Intel, right? So we'll talk about Intel. So let me just bring up Intel. Let's start with Intel. So I did pull up. I have to fix this so that Intel is INTC, right? I think earnings I have already. Where's the earnings data? So hopefully it saved my note. I'm still trying to experiment. So Intel revenue was up. You guys can see the Intel's earning data. Just want to make sure showing the right screen. Hello? Are you seeing Intel's earning data?
Yep.
All right. Revenue up, not much, 7%. Right, gross profit up. Still, the story on the margins is pretty bad, but the stock was up like 30%. Right. So what gives? What happened to Intel? This stock was given up for dead. We thought nobody wants CPUs. Some part of a time stock was trading at around $17, less than their price to book ratio. I liked it at that point of a time. I don't like it at this price anymore. But overall, I'll just rather. I mean, you can read this in the press release itself in terms of what they mentioned. But I think an overall, hopefully, yeah, it has saved my notes. So, few things that they called out and which made a difference was, number one, some of the chips that they had in their inventory, they had almost written it off, right? On the books, they said these chips are, nobody wants these chips, will not be able to sell these chips, so we're gonna take a write off our, that in value of that inventory in our previous financial statement. Now the CFO comes and says, you know what, those chips that were sitting in our warehouse and which we were to destroy because nobody wanted to do it, and we basically wrote down the value of it in our books. Hey, we found customers for it. Not only we found customers for it, we are actually able to charge higher for it. Right? Because there's so much demand of the chips that customers are saying, oh, we can't get our hands on GPUs or other, we'll make use of those CPUs. And that was a big surprise. So not only that they were able to, I don't know, what do you call it? Is there a word called opposite of write off? Like write on? You wrote off an of inventory and then you brought it back onto your book, saying not only that they brought back the chips and able to sell it, they were actually able to command premium pricing for it. Right? Reason is because customers are saying, hey, for running an inference workload, I can use CPUs. I don't really need expensive GPUs from NVIDIA. Sure, for training, I have to have GPUs, but for inference, CPUs are good enough. And there was a question earlier, what happened to AMD and all that stuff? That's another reason all the companies that are play in the CPU, which is AMD is another big company. Now the market is thinking, looks like we found a new life for these CPUs. So this found money, because of, putting that inventory back on books, not writing on of inventory, was a major contributor to the beat on margins. It contributed almost 6.5% to that. So Intel not only cleaned its closet, basically when they were thinking that they're gonna throw those used clothes, but then they found some buyer for it. Now they're charging for whatever they threw out of their closet. Stock surged because CEO Lip Butan, he has convinced the market that CPU isn't being replaced by GPU, but actually they'll have a life and become the control plane for all the AI stacks. So now the market is suddenly positive about, oh my gosh, you can use the CPUs to run your AI, it is okay, and you can run all your inference workload on it. Maybe then it does have a much more longer longevity than we thought. Number two is a foundry de-risking. So if you recall, Intel had long back basically gotten it during the Pat Gelsinger 4 years ago. They got into this foundry business they have always been in a foundry business, but they wanted to become make it a foundry business in the sense that they want to make chips for external customers, right? Not for their own consumptions. But then they never found a customer. They never finalized a deal, and then they had a one fab for 18A. But then when the new CEO came in, he said, I'm not going to invest anything until I have some signed deal or a real customer commitment, right? Now, that commitment word came out from Elon Musk. He kind of did a marketing for Intel during the call, during their earning call. It was prior to Intel's earning call. Elon Musk mentioned that, they're working with Intel to build their to basically supply chips for the terafabs and all that stuff. So, at least, again, we don't know what the deals will be. They're still talking, and knowing Elon, probably is a tough negotiator. So Intel may not be in a position to get the best deal, but at least market is now thinking, wow, they finally have a customer. Right? Intel hasn't mentioned anything about it yet because the deal is not done, but market is thinking maybe. Now I think the fab, which they were trying to spin off, is maybe we have a real customer, and this project can move along, and then they can compete with TSMC. I think that is too far-fetched just now to think that Intel can just compete with TSMC in a year or something. But given, let's say, 5-year, 10-year cycle, and given the fact that we don't have any US, other than Intel, we don't have any other US company that actually can make these high-end chips. That's what market is betting on, right? We want to have a self-sovereignty, because the chips are the, basically the oxygen on which the economy will run. So we need to have a self-sovereignty, and that's why US government also took a stake. That's my only thesis. What to invest in this was the government won't let it fail, because there is no other company that can make chips in US, right? So other thing is the stock was heavily shorted. So that's why we're looking at a massive beat in Intel stock price. If you look at the stock was up, what, 30%, 25%, something like that, right? A huge jump from 66 to 85, right? We're close to 25% jump on it. Too much too soon. Right now we are trading at like 100 times earnings, but who gives? Now, that this is also boosted the other companies in the CPUs game, which is including AMDs. Right now, market is realizing that the CPUs can effectively be used for running your AI inference workloads. Right? Again, I liked it at 17. I was okay to hold it till 55, till 60. Me personally, I don't think I can justify at 85. Right now, it's all based on the hopes of the deals done, hopes that Intel will be able to deliver, hopes that Intel will become competitive when it comes to manufacturing of chips, hopes that Intel will be able to get some slice of the market share that TSMC hold, hopes that the chips yield will be as comparable to TSMC, but we have yet to see. I personally think market is pricing in a lot of future performance in the price today. So I don't want to buy at this point of a time. So I have a covered call sitting at, I don't know, maybe 60 or something. I will let it cold away. I still have some shares on which like a gambling. So maybe I'll do another covered call at 80 next week. But this is too much too soon when it comes to looking at where the business in and what the stock is already pricing in. Hey Johnson, didn't Trump admin invest in Intel last year? They invested, I think, $20 or $25. So that investment is already up 4x. If they invested at 20, it's 4x. If not, like, still decent investment, right? 25 bucks to whatever, 85. Some investors took that as a cue. I don't know. I mean, I think I invested before Trump had invested because I just found that it was trading at less price than, even if you sell its all plants and everything else, you can get more money out of Intel if you liquidate it than what the share price was assumed for. So I bought it at that point of time. So and I generally do not want to base my investment thesis lot of capital on what the government is buying. Right? Yeah, that's more of a speculative play because the government will go away in 4 years. Right? Then what do you do? So, Jim, Intel earnings is a proof that you can't really predict a short squeeze. It's just pure gambling. I think short term, anything can happen. Right? Short term, anything can happen. That's why I just want to focus on the business. Business don't change on week to week basis or month to month basis. In some cases, it doesn't even change on quarter to quarter basis, right? But the stock price change every second. Or there's a car short squeeze, Avis. And then I think it also fell down. Yeah. Who is playing in this? Is it Jane Street? Or was Jane Street involved in some other stock? I don't know. So I had some fleeting news that came across on some website around that Jane Street is involved again. I mean, after Jane Street did what it did in the Indian market, there was some news around they also involved in some squeeze in some other stock. I don't know what is Avis or whichever. Let's see. Let me search for Jane Street. Avis. Did they have to do anything with Avis? Oh, so they were involved. Okay. Right. So now, if you are playing the short-term game, who are you playing against? You're playing against some of the best HFTs in the world, right? Or the best traders in the world. Yeah, so anyway, Elon will beat them up to deliver. First of all, let Elon also deliver. Elon doesn't, he himself hasn't, his timelines are always off. Sridhar saying Lip also removed a lot of fat, delayering management for better OPEX. Yeah, Intel did announce, 16,000 plus. Sometimes they announced a huge workforce reduction. They have to. There is billions of dollars of investment that need to go in a foundry business. Foundry business, it's not easy to build a foundry. And where do you find that money from? Either you borrow, or cut employees. Right? Issue equity or borrow from the market. You beg your shareholders, basically dilute them, equity, or borrow from market, or you generate from internal accruals by cutting down your costs. These are the only three options, right? Legally, to raise money. So they have to try whatever they can get their hands on. So that's what Intel did that. So Nvidia, it's crossed $5 trillion market cap. Texas Instruments hit a new high. We had a new buy from Bank of America. Again, these are some analog chips that are back in vogue. What else? Taiwan Semiconductor, 58.3 profit surge. They reported results last week. Even if you look at TSMC, they did well. over this week. Not bad. So market looking at 21, 22. Yeah, so where we started 364 to almost 402. And there was some news around the TSMC and ASML. TSMC came out and said, we don't want to use ASML's the latest high-end machines because they are very expensive, and they want to use the low NA, which is what they already have, and use another technique called multi-patterning to achieve the same basically the reduction in the distance between these microns, like 2 nanometer or whatever, like Intel is working on 1.8 without using high NA. So that did cause a little bit of, I think the ASML stock fell down on this news, but then it has recovered because of the recovery in the overall chip segment on Friday itself. But yet to be seen, right, how this battle will work out, who have the more power. So that reminds me, where did I have something? Yeah, I'll come back to that. I think I did have. Okay, maybe I removed it. So question, in this battle of chip giants, we got a ASML, or these are equipment suppliers. We got a TSMC, which is the maker of chip but need those equipments, and then we have a fabless NVIDIA. Who has more power in this the chip ecosystem? Who's got more power? Are these the equipment suppliers? Are these the fabs that actually make the chips? Or are these the companies that actually design the chips and have fabs manufacture for them? Who do you think has power over others? Sunita says NVIDIA has power. Maybe because, hey, the cash is coming from NVIDIA to TSMC to ASML. Rajesh says ASML question mark. Oh, ASML. Asif says long-term hyperscalers when they deploy that in-house chips. Okay, I think no one is are wrong. It depends on how you want to look at the problem. Right? At the end of the day, I think the money, the person or the entity that has the most power is the entity that controls the flow of money, where the money is coming from. Right? Now, NVIDIA generated the chips. Where the chips goes in? They goes in hyperscalers. Right, so that's where I think Asif is saying, hey, it's a hyperscaler who will deploy the chips. So they have the power because they basically they pay NVIDIA. At the end of the day, why would hyperscaler deploy the chips? Because the companies that will need access to the compute, they will own the powers. Companies like Nike, Coca-Cola, Nike, because they want to be more efficient in their operations. That's why they're paying Google or AWS or Azure, because it helps them become more efficient, become more profitable. And where the company gets their money from people like you and I. So eventually it's we pay the money to the companies because we want to consume their goods. Their company manufacture the goods and they want to pay to the hyperscalers because they want to be more efficient. Hyperscalers buy chips. So it's a circle economy, right? Now there are interesting thoughts. Sridhar says ASML because there's only one company for lithography. I understand there's only, I think when it says lithography, it says EUV. All right, we saw some background, some singer like that. Use it for breakout room. Sorry, coming back to it. So lithography, I think there are others. You have a DUVs, etc. But ASML is the only company that make EUV machines. The question is this: will EUV machines be still, relevant? So given the pricing that they are charging, right? So somewhere I was tracking But let me go back to ASML and okay, let me bring this up, right? So I own ASML, I own TSMC, right? So there are other stuff that is happening in this industry. Again, I'm not from this industry, so I'll only depend on what I see in the market, right? Canon was trying to work out with something called the stamping tech. In 2023, there was a news. Could that become a threat to ASML? We don't know. Then instead of using silicon, I think some of the Chinese lab were working to figure out if you can use a 2D chips that will give you same compute, but then you don't have to have those squish it to like 2 nanometer. Could that make you very redundant? There are things that are happening. Multi-patterning. This is what TSMC is planning to use. TSMC says your high-end is too expensive. I'm going to use your old machines, and then I'm going to use a multi-patterning technique to achieve the same processing power from the chip. That could be a competitive to ASML. There's a new transistor design that is coming in, right? So that could be a competitor to ASML. The question is not that can any other company create a UV machine? The question is, will we actually need a UV machine to generate the chips that give the same compute power? Is there any other way we can do it? And I think that's what I'm focused on. So I've not been, this is one reason I've not increased my position on ASML is there are companies trying to get away from this monopolistic situation and saying, how do we live in a world without ASML? Right? They have a monopoly. The question is, people are trying to figure out what if no ASML, or try to break into that. And there are few things that are already happening in the market. Right? So, so that's my thesis on. I might still like ASML. I think the companies are years behind on EUV. I know China. Even I didn't update my thesis, but few months ago there was another breakthrough that happened in one of the Chinese lab. Which again, I think they did a prototype, right? It was a prototype for EUV on generating the EUV. Very small, but probably take another 5 years to perfect it, to be able to generate the EUV, right? What if what if we change the way we manufacture chips that we don't need EUV? That's what TSMC is trying to figure it out. Anyway, it will be few years before it can get dethroned. But the other bigger risk on the ASML is that, hey, there are very few number of fabs. You can count on your hand in terms of where you can sell these machines to these $400 million machines. Right now, the two customers that they have their machines are SK Hynix and Intel. They got high-end machines. TSMC told they don't want it. Then you got what fabs? Like you got a Samsung, then you got some Micron. I mean, there are not hundreds of fabs across the world. And if the biggest fab in the world says, I don't want your machines, it does put a pricing pressure on you. There'll not be like the Microns of the world or SK Hynix of the world won't be able to consume what TSMC could have consumed. So there will be pricing pressure. There is basically customer concentration risk. So that's what you need to guard against. If you are invested in ASML, I am one of the investors. Can you please show name again? New chip names? I didn't show the chip names. Sunita, I'm not clear. What do you want me to show again? Yeah. Anyway, what else on? Yeah, so we talked about NASDAQ 18-day streak. Google, right? Google announced some $40 billion investment in Anthropic, $10 billion now. And also, Google announced their 8I and 8T, basically 8th generation of the TPUs, tensor processing units. And even if you look at it, everyone, Google, Amazon, even I think Microsoft, they're all trying to create their own chips and not being dependent on NVIDIA. Look at the NVIDIA margins. Any company will kill to have those kind of margins. And they know that NVIDIA is able to get these margins because everyone need NVIDIA chips. But this is why they want to create their own in-house chips so that they don't have to pay NVIDIA through the nose. And Google announced their 8i and 8t for inference and for training. They're going to use it on their own data centers. Amazon has got Trainium and what they call Inferentia, some of the name of their chips, which is again their own chips, which is also helping some of the other companies like Broadcom, which is involved in the ecosystem of creating these chips for Googles and the Amazons of the world, right? Marvell, they make some chips for Google. So when Google announced, like, we're gonna do a $40 billion investment plan, we're gonna build our own chips, I think the Marvell stock also went up. At the end of the day, we're looking at how can we squeeze the margins from NVIDIA. Right? So look at the NVIDIA margins. Forget the stock. Let's go back to the margins of NVIDIA. Right? Any company will kill these for these margins, right? 50%, 55% net profit margins. And it's a chip company. 55% net profit margin. This is like a way higher than any of these alphabets. Amazon has got a retail business, so I gave it. Their margins are pathetic when you look at an overall business. I don't know if they report just AWS. It won't look at one of the most profitable companies on earth, Google, low 30s to high 20s. So everyone wants to get a slice of what NVIDIA is doing. See, how can we not pay or get away from paying to NVIDIA? Amazon also announced investment in Anthropic, Claude. Basically, if you're watching the news, Claude has been disrupting so many businesses. They'll announce one plugin, and then we'll see a bunch of shares in that industry go down 10%, 15%. Apple will have. He has not officially begun his tenure. See, this is where some of this. He'll begin his tenure on September. But Tim Cook, he announced that he will step down as a CEO at the start of September, and John Ternus will take over as a new CEO. Tim Cook has had a great run. He's like 65 plus. I don't know how old is Tim Cook. I know he's single. How old is he? How old is Tim Cook? What he's gonna do is like retire. Go to be 65 years. Oh yeah, 65 years. Man, had a great run. Been a CEO for 15 years, almost 15 years. And the company has been one of the best wealth creator, right? But at some point of a time, I think people are questioning what's next. What's the new stuff that you're building? It's a great operator, and sometimes you don't have to build the new stuff. Just keep doing the same shit better and better and better and better year after year. But then you can only better it up to a certain extent. Now the street is questioning what's new. Apple Car didn't work out. Apple home devices didn't work out. Apple Vision Pro didn't work out. Siri hasn't worked out. Siri was the first AI in the world we had on our phones. That didn't work. I mean, now Apple is so far behind in integrating AI into their products. So market started to question, and I think he has a good run. I have is one of the greats. So I admired him more for the discipline that he had in capital allocation and not running after the every new shiny object. I really respected him for not spending hundreds of billions of dollars like a lot of other companies are spending on the AI stuff, right? So because he's a very well, but again, if you don't spend and don't, you're not gonna get the future growth. Again, it depends on what kind of investor you are and all that stuff. He's bought back $600 billion plus of stock during his tenure. So shareholders, I mean, handsomely rewarded shareholders. Yeah, I think now we're gonna get John Ternus, who's been heading their hardware engineering group, and he'll become a CEO. Hopefully, we'll see some hardware infused with AI. Right. Adesh's Apple Watch was a success. Yeah, Apple Watch, AirPod. Right, there were a couple of products that had come under new products that have come under Tim Cook's leadership that have been successful, but none as, even if today if we look at, right, most of the revenue comes from their iPhone. iPhone is still the biggest revenue driver for them. Services have caught up over the last 4 or 5 years. Services has become bigger. It has become bigger and bigger portion, because if you can't generate more device, if you don't have more devices, how do you extract more from existing devices? Is building services, which is a great business that he built in last, I guess, 5 years, maybe 6 years, since they started reporting it as a separate business in their financials. Yeah, so I mean, nothing against it, but at the end of the day, I think the market also wants to look at, hey, I want to see in future, next 10 years, 15 years, and we want someone else to take over. He has a great run. Someone else who can lead us into the new AI and agentic AI world, which we don't even know how that will pan out. Rajesh says Mac Mini Studios are a heavy demand and now with local LLM use. Yeah, I think the OpenClaw, when the OpenClaw came out, the Mac, these mini studios suddenly went out of stock. But again, these are the short-term bursts in the sales. We're looking at a overall, from a long-term perspective, the DNA of the company, or is the DNA of the company is trying to be more efficient or trying to be more innovative and growth. You cannot got both together, right? Sometimes you have to sacrifice one over other. So let's see, who comes out and how John Ternus is. Only thing that when I read about the news, I didn't like was he's been SVP and head of hardware engineering, and I think he's a lifer in Apple. I guess I thought maybe, hey, if he hasn't make it, how long John Turner's been at Apple?
26 years.
25 years. Joined in 2001. Probably almost, yeah, he's been a lifer in Apple. And how he's gonna make the changes that, like, he's been a part of the same cabal that's been running Apple. But I guess Apple may be a company in which outsiders haven't been able to succeed. Like, there are some companies, if you to bring fresh perspective, you bring in an outsider CEO, right? Other investors will say, come on, you now promoted the same guy who was like your second in command when all the mess was happening in your company. Now he's the CEO. How's it going to make any difference? Right? So for my first reaction when I heard that news was, well, they got an in-house guy, and now he's going to fix it. He hasn't fixed it for last 3-4 years. I was mostly thinking about the AI integration. Now he's gonna change. But then I realized, I think maybe all the outsiders that maybe Apple had hired to fix the business probably didn't work out in the history of Apple. They
Yeah.
hired one guy from which of the retail stores who came and like Johnson, Ron Johnson, Ray Johnson.
John Scully.
No, John Scully was like that was like prior to Steve Jobs. John.
Yeah.
Yeah, that.
Yeah.
No,
But
no. I'm talking
very
about
quick,
the
just sharing
recent-
a perspective in that, because I read the book Good to Great, and the guy goes and analyze hundreds of companies and businesses, and the best performing ones promoted internally.
Yeah.
Because that was one of the conclusions of his research. So just sharing that. Yeah.
So Good to Great. I forgot the name of that. It's the same, right?
Jim-
Built to Last.
Yeah, Jim Collins, I think. Yeah.
Jim Collins, Built to Last and Good. Oh, come on, it's been like decades since I read this book. I'm forgetting the names now. Yeah, and I think last meeting I coded a book and I gave the name of the author wrong. I think it was Alvin Toffler, and I said like Al Rice and Jack Trout. Oh, like 30 years ago, I read that book around. Yeah. Anyway, so yeah, but I think the outsiders haven't worked in Apple. Some companies they have, some companies they may not. So it's okay. We'll give a benefit of doubt. See what John brings in. I think the market will see. Hey, when you wanna, what's new? It's because Apple is considered as a hardware company, and we haven't had a new hardware in a few years. So we'll see. Let's talk about ServiceNow. Oh man, sorry if you're a ServiceNow shareholder. The journey over the past, I guess, 12 months or 18 months haven't been that great. Now, so I mean, from a revenue side, it's not a hyper growth company, right? But right now, everyone is scared of that. It's a victim of SaaSacalypse or SaaSicer that's been going in the market over the last few months. Is that Claude or these LLMs are going to make these companies redundant? So ServiceNow is now trading at where it last traded in 2023, almost exactly where it was like last week of April, right? It's like gave up all the 3 years worth of gain, right? Again, if you're investing in individual stock, you gotta be really, really watching the company and the business and the overall markets and the competitors and the technology side, what's happening, what could disrupt it. No shame in owning ETF. I cannot emphasize enough. A lot of people when I meet and we talk about investing, every get excited, but tell me one new company. Tell me great company. I'm like, it could be great for me, not for you. Because you may not have a wherewithal, you may not have a time to follow the company. Everyone wants to know a company. You go to any investing meeting or tell me one good company, that you think is a great business, will do good. And this I hear from someone who is not even focused on investing because they're all investing in their regular 401k. But everyone wants to talk about the next hot company. This is what happens when you do in hot companies, right? Become hot, they cool down. So again, I say the same stuff to them. If you don't have time, interest to follow individual company, don't touch it. You will miss out on some company that become 10x, but you will also avoid the disasters. Like this is one of them, Adobe, and there are a lot of companies, right? You have gone through. And this is the reason why 85% of the Wall Street managers just cannot beat S&P 500. And you think you can beat S&P 500 and be the 15% with your job, with only spending a few hours on the sidelines in investing, right? You're thinking too much of yourself. No shame in having ETF portfolio. Right? This is despite I invest in individual companies. I love to follow them, but I will still say there's no shame in owning ETFs. I'll be perfectly happy if someone comes and say, hey, all I did was just own 4 ETFs throughout my life. Great. Probably done better than 90% of investors. It's not sexy, it's not exciting, but probably it's the right thing to do. for most of us. Right? But so ServiceNow, again, it had the worst day in last 3 or 4 years. It was down 18%. The same concern that maybe let's pull up their let me pull up ServiceNow. Where's that window where I had earnings opened up? I think I had Now's earnings now. So let's go and look at an overview. Right? As a company or as a business, it's not that it's available cheap. It's still trading at an expensive valuation. So I'm not too surprised that at a chance where the market is seeing, oh my God, their business model could be disrupted, that the stock has sold off. And even after they sell off, it is still not at a valuation which I will call it as a reasonable valuation. Right? It's not that great a business. I mean, I've never owned it because I never could wrap my head around how expensive its valuation was for the quality of the business that it is. Decent profit margins, like 13%, 16%, overall, like 3-year, your average is 15%, right? But not for which I would pay like 10 times sales, right? For a 15% margin, I wouldn't want to pay 10 times sales. It's not a bad business, but when it compares to the pricing, it was super expensive, right? So there is, I think Howard Marks says, there is no business so great that any pricing would justify for it. Any high price is justified for it. There is no business so bad that you cannot buy it at any reasonable price. It's always about what are you paying for what kind of business. Let's look at it. Earnings. Did I already pull in the earnings? Okay, they didn't release a press release on Edgar yet. Okay, so revenue was up around 22%. Gross profit is like up $2.83 billion. Looking at 75% gross margin. Operating margin is where like 13%. That's a huge jump between like a lot of their operating expenses. What did I put some notes after I saw the earnings are not ready to buy yet? So they raised their guidance to 15.7 to 15.78, but this was largely driven by the acquisition that they had done. So it's not that organically they are growing it. It's not that the customers that they had are willing to spend more. It is because they acquired a company and now that company revenue becomes a part of its own revenue. But that's where the increase came from. Some of the highlights was it raised 2026 AI ACV to $1.5 billion. Still small. Current remaining performer obligation is 21%, which is a solid pipeline. But when you're looking at other companies which are growing like 50%, 21% suddenly started saying, like nothing exciting about. They talked about Middle East delays, saying 75 bips of growth was lost because of delays in Middle East. Margin headwinds coming through the Army's acquisitions. It was being priced for a moonshot, like 22 times forward sales, but it delivered like any other good company will do it. Right? So it's not that the quarter was bad, is that the pricing was, it was priced that it's going to be a fabulous quarter. It's going to be a great one. It was just good. It wasn't that great. It was just good quarter. So it's not trading at it wasn't trading at a reasonable valuation, and given the fact what we are seeing in the Sasser collapse, market sold off their stock. Right? It is it's a good maturing business. It was being priced as a high growth business, which market didn't see or can't see in future, and so repricing is happening with this. Not a bad business. It was just a bad pricing that it was trading at. So that is ServiceNow. What else? Quick look at a crypto, and then we'll open up a breakout rooms. Let me skip these two. Oh, stock buy and sell. I didn't buy anything or didn't sell anything. No stock transactions. Not that you should follow this, but I just want to be transparent because we talk a lot of individual companies. So I want to tell you what did I buy or sell this week. Nothing. Quick look at a crypto side. Bitcoin is above 77. Where is my friend? I'll come back to Jose. You saw that you want to see a little more positive action, like 77 doesn't excite you anymore. You want more? Ethereum is 2.3. Yeah, what caught my attention was this one, because it was like over some of the podcasts that I listened to. I didn't spend much time this week on doing a lot of listening or reading, because I'm still working on building some stuff. So, but I did whatever time I spent, I tried to figure out what helped in this Kelp DAO and what exactly was going wrong. And this is why if you're dealing in this economy, trying to do DeFi, trying to get extra yield by staking, you never know where the danger lurks, right? So maybe now we can talk about it. I'm done. Let me ask any other questions on the normal market. I'll open up the breakout rooms. We can talk about other stuff, and then maybe we'll get into the details of, or try to understand what happened in this Kelp DAO and how Aave became suddenly illiquid, and how a lot of folks' money stuck in Aave. Any other questions? Anything else that we want to talk about? So I got one homework around that callable, but I don't know. I'll not be able to get to it maybe for another couple of weeks until I'm done with some of the new work. Nope. Let's open out for breakout rooms then.